In this video, I am going to discuss about perpetuity. Perpetuity is where there will be cash flows for infinite amount of time periods, which means there is no end date. So there will be infinite amount cash flows in the future. The same initial amount will be paid or received every year and there is no ending. Let me give you an example. Let's say you have a fund. This fund will annually give you $1,000 until eternity, which means every year you will get $1,000 for eternity, which means this will not end. This will go to eternity. These are called the perpetuity. Always remember that we are considering these cash flows annually. Year 1, year 2, year 3 to infinity. What we are going to do is under perpetuity, we are going to calculate the present value of these cash flows. This is the perpetuity discounting formula. Now you have already learned about few different discounting factors and discounting formulas. For the perpetuity, this is the formula. This is really simple. The present value of the perpetuity equals to the initial amount multiplied by 1 over R. R is the discount rate. This is an interest rate. This calculation is really simple, but always remember to convert the percentage value in the denominator into a decimal. Students will get these easy questions incorrect because without thinking they will put the percentage value into the denominator. You have to convert the percentage into a decimal value. It is very important. So capital P represents the present value of the perpetuity. Capital F represents the initial amount. This is the amount of money you will receive or you have to pay. R is the discount rate. This is an interest rate. 1 over R is the discount factor for perpetuity. For perpetuity calculations, there will be no present value table because it is really simple. The discount factor for the perpetuity is just 1 over the discount rate. This is really simple. Let's do this example. $230 pays out every year to a fund for perpetuity. Discount rate is 3%. Calculate the present value of perpetuity. This means $230 will be paid out to a fund for the perpetuity. This means there will be no end date. Now what we have to do is we have to calculate the present value of this perpetuity. So now we know the formula of perpetuity. This equals to F multiplied by 1 over R. F is the initial amount, which is $230 multiplied by 1 over R. Always remember to convert this percentage into a decimal value. So 3 over 100. 7666.67. This is the present value. Simply means if a person pays out $230 every year for the perpetuity, the present value of these cash flows will be $7,666. This is a really simple concept to understand and calculate. Now let's go one more step ahead. Advanced perpetuity. Advanced perpetuity is a special case of perpetuity where there is a cash flow at the beginning of the investment or project, which means there will be a cash flow at year 0. We just discussed about the perpetuity. Perpetuity is where there are cash flows every year for the perpetuity. But under perpetuity, there was no cash flows at year 0. Year 0, there was no cash flow. Beginning from year 1, there will be cash flows. Whereas advanced perpetuity means there is a cash flow at year 0 as well. So from year 0 onwards, there will be cash flows. Year 0 means just now or in the present. What we are going to do is we are going to calculate the present value of these cash flows. So this is the formula to calculate the advance perpetuity. This equals to initial amount or the cash flow multiplied by 1 plus 1 over R. R is the discount rate. Now let's expand this formula. This equals to F plus F times 1 over R. You can identify this segment. This is the formula to calculate the perpetuity as we just discussed earlier. So what we have to do is we have to just add the initial amount to this perpetuity. So we can calculate the advance perpetuity. Let's say there will be an advance perpetuity where the cash flow is $100. So simply what we have to do is we have to add the initial amount to the perpetuity amount. Perpetuity is 100 over discount rate. So simply what we are doing here is we are adding the present cash flow to the perpetuity amount. So it will become the advance perpetuity. Now let's do this example so you can understand this better. $230 pays out every year starting from year 0, which means this is an advance perpetuity situation, to a fund for perpetuity. Discount rate is 3%. Calculate the present value of perpetuity. So the formula to calculate the advance perpetuity is present value equals to cash flow 1 plus 1 over R. So this equals to $230 times 1 plus 1 over R. R is 3 over 100. So this equals to 7896.67. This is the advance perpetuity amount. Let's go back to the perpetuity calculation we just did. Here it is. The perpetuity is 7666. So let's deduct 7666.67, as now we know we can expect the initial cash flow here. This equals to 229.99, which means 230. This is the initial amount. So under advanced perpetuity, what we have done is we have added the initial amount to the perpetuity amount, which means at year 0 there is a cash flow. Under perpetuity there was no cash flow at year 0. So this is perpetuity. Year 0 there was no cash flow. Under advanced perpetuity there is a cash flow at year 0. So this will go to infinity. This will also go to infinity. I hope now you understand the concept of perpetuity and advanced perpetuity. What we have done here is present value of the infinite amount of future cash flows. Thank you for watching. See you in the next video.